Hello, guys. I welcome you guys to this section of chart analysis and trading psychology and technical analysis hidden secrets exposed. My name is Dgreat. Okay. On today's episode, we'll be looking at coffee. Coffee is actually a contract. It's a commodity anyway. Of course, it falls under soybean, palm oil, millet. In that category because they are not under agricultural commodities that we trade. Okay, so I'll be looking at coffee, and then it's actually giving us some kind of indication that it might be ready to go up. Okay, so coffee might be getting ready to move up. So we're going to look at in this video, we're going to learn how to map out market structure. You're also going to learn about inducement, liquidity, and they're also going to learn about entry. Okay, so just stick around on the channel. You're going to understand how to analyze this coffee, and then use it to also analyze other trading assets you might like to trade as well. Okay, so now let's get straight to the point. Now, before price came to this level, something actually happened. Okay, so if you look at coffee right now, it is actually sitting on a very good key level, but then something happened before price came here. Let's go from the high. Let's look at the high. Something happened here before price came to the low. Something happened at the high. Okay, now right here we can actually see that this was what price did before it pushed all the way down to this point. Okay, to this point, right? Now, good. So now let's look at what actually happened here based on market structure and liquidity and entry. Okay, now let me explain something. Whenever price wants to reverse, okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, good. Now, when price wants to reverse, there are two things that could happen. The initial in a bullish trend, if price wants to reverse from bullish to bearish, there are two things that could happen. It could be a sweep of the previous high, okay, or it could be a break of structure and a market structure shift. It could be a sweep of the previous high and a market structure shift, or it could be a break of structure and a market structure shift. Now, we're going to look at those two categories and look at how to actually analyze it. Now, your understanding of this concept will help you to pick it will help you to be able to enter a trade at a very good level, okay, with conviction and with clarity. Okay, so now let's look at the first scenario, which is actually break of structure. Now after break of structure, this is what we call break of structure, right? Now we have this break of structure here. Great. Now after this break of structure, and then price takes out the last pullback, which is the last low here, we'll now have what we call market structure shift. Great. Now, how do we pick out our entry here on market structure shift? It means that this previous high was not a sweep, it was a break of structure. All right, so for us to take any kind of sell here, we need liquidity to do that. So if there is no liquidity here, if there is no liquidity on this leg, then we don't have any entry. Any entry you take here is going to be in a loss because of what? There is no liquidity. So price will definitely use this high as liquidity. So that's why sometimes you take your reversal trade, it hits stop loss because there is no available liquidity at that point in time, because we had a break of structure before market structure shifts. Okay, so what we have to wait for here is to wait for the first pullback into this level. So we have to wait for price to make a retracement into this level without mitigating either the other block or the fair value gap into that level. Okay, so we want to wait for price to do what? To make a pullback into this level and then push all the way down. Now price has given us an inducement liquidity, so that first pullback after market structure shift is called an inducement liquidity. Okay, so this is called an inducement liquidity, right? Good. So if there's any kind of available order block here or fair value gap that is closer to this inducement liquidity, that becomes our point of our interest. I hope this is very clear. That becomes our point of interest, right? Great. So now sometimes this could actually this first pullback may not actually push all the way down into that premium level or into that high. It could actually push to this level and then continue displacing to the downside. Now in this situation, this breaker block here, or this other block here that would have held price from pushing all the way down, okay, that would have held price, push price up, becomes a breaker block. So this breaker block becomes our what? Our point of interest, not this one here. So it is in two scenarios. So we have situation where it depends on where the liquidity is actually lying, right? So if the liquidity was able to, if the inducement liquidity was able to push all the way up into this level, if it was able to push all the way up into this level, then this other block of fair value gap here becomes our point of what? Interest. Now this is a situation where we have a break of structure. Now let's assume that we don't have any kind of break of structure, that this high was a sweep. Let's assume that this high was a little sweep, just a little sweep of this high and then a displacement, okay? That means we don't have any kind of candle close on that high. So that high was a kind of a sweep. There was no candle close, okay? And then we had a market structure shift. That means price took out the last pullback here, right? And this high was a sweep. This high was not a break or structure, it was a sweep, okay? Meaning that there was no candle close above. So now in this situation, we are not going to be waiting for what? We are not going to be waiting for inducement liquidity because price have already taken liquidity. Okay, so in this situation, we have to now wait for price to tap into other block of fair value gap at the premium level, that is above 50%. If you use this Fibonacci level from this point to this point, anything above 50% is premium. So if price can be able to tap into this other block of fair value gap at this premium level, we can actually take our sell, because of the fact that price has already taken liquidity. Price has already done what? Taking what? Liquidity. So we are not waiting for inducement liquidity again because price have taken what? Liquidity. So hope this clarifies everything for you guys. Now let's look at what is happening here on coffee. Okay, now before price was able to come to that low right now, something happened here. Now this was the last pullback that price made. This was the last pullback that price made, and then we had a break of structure to the upside, and then we had this high here. Okay, so this is the high, this is the high, and this is the last pullback here. Okay, now after that, price was not able to take out this high. Price was not able to take out this high. It pushed all the way down to this point, and then was not able to also take out this low. So it was a sweep of this low. So initial one was a sweep of this low. So mark it out. So there was not a break of structure. Also, if you're looking for sell, there is no sell because this low was a sweep. It was not a break of structure. Okay, so price pushed all the way up, was not able to take out this high. Okay, and then what happened was that price pushed all the way down and then was able to do what? Take out this what? Low. Now it cannot extend this guy to this point. Okay, now we now have what? A market structure shift. So we have now had a market or structure shift. So we now have to wait for a false pullback into this level. And then mind you, we also have what we call let me just change this to another color. Great. So we also have a fair value gap, and then we have a fair value gap and another block on this premium level. Okay, so we'll have to wait for that first pullback into this level. What happened? Price pushed all the way up into this level. Okay, now this is not an entry because we have not had any kind of pullback into this level. So this point here is the inducement was liquidity that price will definitely take out. You can see. So this is your inducement liquidity. Okay, now if there's any kind of other block that is closer to that inducement liquidity or fair value gap, it becomes your point of what? Interest. It becomes your point of interest. Now, price mitigated the wick. This other block was not actually mitigated. And if you look closely, you'll find out that this other block was still very much what? Valid. Okay, it was not fully mitigated. Now, what happened was that after some couple of days and all of that, price finally came back into that other block, took out that inducement liquidity, and then reacted from the other block, and then we had a push to the downside. Now, something also happened here. When price was doing all of this, we also had what we call a valid harmonic pattern into that level. Now, the harmonic pattern we have into that level is called an alternate bat. From this point to this point, this is 0.382 and this is 1.13. So this is what we call an alternate bat. So you now have your harmonic pattern, you have a valid inducement liquidity, you have a valid order block for your entry. So this is very perfect entry for this setup, and the full target was actually achieved right here. Now, sometimes you're going to see how many pattern into this level. Sometimes you may not really see how many pattern into this level. But what's important thing is that you're following structure, and then you understand the concept of inducement liquidity and how to actually pick your entry. Okay. Now, let's look at what is happening here on coffee right now. Now, from the weekly time frame, you can see that this is a rejection week, and this is a low. Price rejected, and then price have taken out this low right now as a kind of liquidity. Okay, and then you can see that this is also a kind of point that price broke out from also. So we might be anticipating a kind of push to the upside. It is an anticipation. We don't really know if it's going to happen soon or later, but then it might actually happen based on what is happening right here on coffee. Okay, so now let's look at it from the daily time frame. So on the daily time frame, you can see that this is actually a liquidity point that price have taken out, and this is an order block also. This is an order block also that price have also mitigated right now. Okay, and that we're having a push to the upside. Now, the same thing that we saw before we had that sell is the same thing we have to expect here for us to take the buy. It's the same concept, it's the same method. So right now, you can actually pick it from either from the 1 hour time frame, 30 minutes time frame. It doesn't really matter. So now what we are waiting for here is what? A break of structure. Now we don't have a break of structure yet. This is a sweep. So we have to wait for market structure shift. Okay, and then remember that this is also a break of structure here. It is not a sweep. This is what? A break of structure. It is not what? A sweep. Let me look at it from the forward. It's a break of structure. It's not a sweep. So this is a break of structure, not a sweep. So we have to be waiting for inducement liquidity and valid order block for our entry. Okay. So now let's wait and see what happens here. If price eventually takes out this low and then push all the way up, and then we'll have to wait and see if this is a break of structure or a sweep. If it's a sweep, then we don't need to wait for any inducement liquidity. If it's a break of structure before the market structure shift, we have to wait for inducement liquidity and valid order block for our entry. I hope this clarifies everything for you guys. So for coffee right now, we just have to wait and see if we're going to have a market structure shift, and then if price will give us an inducement liquidity, then with a valid point of interest for our entry. So this is going to be something you have to be looking at for from now till a couple of days, because this runs on a timely base. Okay, it doesn't really run the full 24 hours as of coffee. It runs from 6 to 9 p.m., 6 a.m. to 9 p.m. or 9 a.m. to 9 p.m. That's how it runs. Now, you'll be asking yourself, where can I actually trade coffee? Where can I trade coffee with a very good low margin? Okay, you can trade coffee on Deriv. Link is below this video. Deriv gives you a very good lot size for you to contract size for you to trade all this kind of asset like agricultural commodities. It gives you a very good lot size. Even with a 0.01 lot size, you can still trade coffee. You can still trade it very well and make profits with Deriv. If you're using Deriv, if you click the link below this video, you're going to sign up with Deriv. Okay, you're going to trade. You can trade cryptocurrency. You can trade commodities. You can trade currency pairs. You can trade synthetic pair with Deriv. So I use their zero spread account. I don't use the standard account. I use the zero spread account. Okay, so sign up. Use the link below this video to sign up, and then if you sign up, you're actually going to open a zero spread account, and then you can be able to trade coffee. It's the same, just type coffee, you'll be able to see it, and then you trade it. With 0.01, you can trade coffee very well. So this will bring us to the end of this video. So let's watch and see what happens here. Right now it has been a sweep, so meaning that we have not had a full candle close above that high, so there's no trading opportunity. We have to wait for a couple of days to see if we're going to have we're going to be able to have a break of structure to the upside. That is market structure shift. Then with the concept of what we have discussed so far, you'll be able to take a trade on coffee. Okay, so just to summarize what we have discussed today, we have discussed about market structure, we have discussed about the concept of inducement liquidity, we have also discussed the concept of entry after price have given us inducement liquidity. Okay, we have also understand how to look at higher time frame key levels and how to also pick our trade. So this will bring us to the end of this video on coffee, as we look at the latest developments as time progresses. So thank you guys for joining me on this video. If you enjoyed this concept, please subscribe to the channel. I will really appreciate if you can subscribe to the channel. Like this video if you actually got value from this video. I will appreciate that, and this will give me the fuel or the energy to also produce this type of content in future. So thank you guys for joining me on this section. See you guys in the next episode, and this will be all for now, guys, and then bye for now.